guys, how's everybody doing out there in YouTube land and on Twitter and on X and whatever else you're on tonight? Who knows? How is everybody doing? All right. Remember, this is not financial advice. Consult anything you hear here or anywhere else with a professional financial advisor. All right, let's check out the market and then let's do the daily factor. It's time for Misty Monday. Who's ready for Misty Monday? I bet I know which one's going to win. The same fun wins every week. I think it's going to be that way for a while. But in any event, we'll talk about that in a second. Let's look at stock index futures because they trade 23 hours a day. And we can see what they're doing even at night, and they're rallying. Heck yes. Look at that. The market closed right here. I mean, because the market sold off down to here, and we've been rallying. We're almost over the high for the day. Great job, Mr. Markets. You got to like that. Let's look at the NASDAQ futures, and they've already taken out their high for the day. So likely ES will shortly as well. So maybe somebody's tweeting. Maybe there's something good going on. Who knows? Let's look at Bitcoin. Now this one's actually up 0.5 point, and Bitcoin had a pretty nice size rally today. It hit a low of when was that? 530, 630 last night. Hit a low of around 86.5 or something, 86.25. Bounced up almost to 90 and settled out at 88,670. Or almost 89, not almost to 90. Anyway, we'll take it. Now let's look at gold. Why can't I ever remember the symbol for gold futures? It's not brain surgery. Gold futures. I mean, for COMEX gold. GC. I always. Okay. GC. Gold futures. Let's check out gold futures at this hour. And they're rallying again. Gold futures sold off into the close also. Silver futures. Everything sold off into the close. I think Bitcoin even sold off into the close. But it's all rallying again. Gold futures are trading at 5 something. Let's look at old silver futures. Look at little. There we have it. Also rallying. That's good to see. That is good to see. I've just about doubled. I think I've about doubled my entry price in K-Sil. I was looking at it. Anyway, man, I wish I had more of it so I could sell half of it and then have a free silver position on. Hey, DJen, how you doing? Bond, thanks for being here. All right, so let's get this show going. Let's talk max factor. So the max factor is my own proprietary metric that I think works better than, I know it works better than yield for evaluating these funds. And I'm even going to say it works better or maybe different than total return does. I like to look at it. So what we do is every day of the week we break out a separate subset of all the high yield stocks out there, and we do them. And on Mondays we do a Misty Monday. So Misty Mondays, it's a big one, but we're also going to we'll probably look at Coinbase derivatives, Misty derivatives. What else did I put? Trying to think. Sometimes I do Robinhood in there too. And also we'll look at a few other funds. We'll look at some Bitcoin funds and see how they're doing and see what we're looking at. So here we have it, Misty Monday. All right, let's introduce our contestants, and we always start with highest yield. YBTC is our first contestant. Now this thing's impressive. This is really impressive. I don't know if I know or if I've ever known of another fund that's done this before. This can't be right. Has the price really gone in from 90 days ago from 42 to $4? Are you freaking serious, YBTC? I'm thinking that may be an error. But if that's true, that would explain why the yield's so high, or that would explain part of the reason why the yield's so high. Okay, and IMST is also a crazy one. It looks like it's lost half its NAV. Let's just line up IMST against YBTC right here. Let's just kind of look into these. IMST. All right, so let me try this. YBTC is down from 44 to 20. I mean, YBTC is getting killed, but it hasn't dropped from 44 to 4. That's obvious. There's obviously an error there. Sorry about that. But I think it is safe to say YBTC is not setting the world on fire. The NAV's down. I'll work on the calculations. But next on our list, okay, so we have YBTC, we have IMST, which is, I believe, from Bitwise. It's crazy too. Then we have MSTW. Now this one has leverage, uses 20% leverage per week. So let's just compare MSTW versus IMST. I really didn't look at IMST that much. MSTW is from Roundhill, and there's IMST. Okay. IMST is from Bitwise. I mean, you know, we know MSTW used a little bit of leverage. I didn't know that if IMST did use leverage or not, but now that I'm looking at it, maybe not. It's just, I think that's just how much MicroStrategies is down. Look at IMST, their price, their NAV alone's dropped from $13 to $30. Been more than cut in half. But same thing with MSTW. Their NAV's been more than cut in half also. It's just a rough time to be in the MicroStrategy business. Let's compare IMST to MSTR, the underlying, the parent company strategy. Yeah, the parent company's down 51%. Really, IMST is doing a little better than the parent, just, you know, due to the dividend, of course, but due to the yield. But yeah, that's all it is. All right, so let's go back to meeting our contestants. Anyway, these are all sucking. All right, now we have one that XBTY isn't based on MicroStrategies. It's still part of the Bitcoin ecosystem, but it's based on Bitcoin. So we'll look at XBTY against the next Bitcoin one that comes up here in a second. That one pays a gigantic yield. NAV's gone from $16 to $10 lately. All right, then we have MST. That one's based on MicroStrategies. It's double levered. That one's crazy. Then we have YETH. This is based on Ethereum, paying about 120% yield. NAV's gone from $23 to $16. That's actually not too bad. Of course, Ethereum's done a little bit better than Bitcoin lately. Then we have LFGY. Now, this isn't really based on Bitcoin, but it's based on stocks that are in that ecosystem. So it's pretty closely related. Then we have IETH, an Ethereum high yield fund. Then we have BITK. Now, I like this one, and I have some of this one myself. Let's compare XBTY with BITK. So XBTY is from Granite Shares. BITK is from Tuttle Capital. Matthew's going to be on the channel Friday afternoon. So be looking for that. If you want to see Matthew Tuttle and you have some questions for him, be here Friday afternoon. We can visit with Mr. Tuttle. All right. BITK. So let's just run them side by side. BITK against YBT. Or is XBTY? Yeah. Right. It was a BITK against XBTY. Yeah. XBTY from Granite shares, BITK from Tuttle. Okay, let's kind of look at those just against each other, see if we can determine much. Really not a lot to see there, right? I mean, BITK was actually held up. It looks to me like it held up better the whole way until the market was way down, until the market dropped 30%, 25%, then BITK passed XBTY. Neither of them did great. You know, Bitcoin was way down. I mean, these guys are based on Bitcoin, but man, they're right there together. One's down 28, one's down 27. All right. Well, like I say, been a rough time in that business. I still have faith in BITK. I believe in the BITK. Then we have MS2. This is from Rex Shares, yielding a more reasonable 69%. If I had to do a MicroStrategy based one, it would either be one of the preferreds or it would be MS2. We'll talk about the preferreds in a second. Now, or it might be MSTY. I don't have a problem with MSTY. I have a problem with Mr., but not MST. MSTY is doing what it's designed to do. It's just Mr. Strategy is not doing what it's designed to do. But in any event, Msty itself is dropped from 58 to 30. So a little bit less than half. Anyway, then we have BCCC. This is from Global X. Global X is kind of known to be a little bit more on the conservative side, and true to form. Just looking at the NAV without knowing anything else. The NAV's dropped from 23 to 17. That's better than any NAV we've seen so far. It's still down 22%, but it's the most conservative out of anyone we've seen so far. Speaking of crazy funds, we have Maxi right here. Now, Maxi's insane. I mean, this one's dropped from 27 to 14 on NAV. Who even cares about the dividend? I mean, the NAV, it's been cut in half. I mean, I'm just joking. I say who cares. But anyway, then we have Baggy. This one's NAV has dropped from, this one's NAV is not down too bad. It's only down 27%. Baggy, actually not too bad. And really just on a comparative basis compared to some of these other ones. In the Bitcoin business, Baggy and BCCC are kind of holding up better than any of these. Now look at Blocks. Blocks is down 28%. That's not great. The NAV's dropped from 26.25 to 18.75, paid about a 40% yield. Been a rough quarter for any of these. I mean, there's red all over the screen. Then we have BTCI paying a 35% yield. NAV's dropped from 58 to 43. Then we have BITY. NAV's dropped from 53 to 39 or 40, paying about a 30% yield. Then we have YBIT. NAV's dropped from 45 to 31. It does pay a 23% yield. I mean, but that's not really doing that much for you when you've lost half your NAV in a quarter, right? Or, not half your NAV, 30% of your NAV in a quarter. So, it's still not great. Okay, then we have Stride. This is a preferred stock based on MicroStrategies, and Stride, Stretch, and Strike all are. And Siri thinks I want to talk.
I found this on the web for Ann. Check it out.
She just pulled up the definition of and, like I need to know the definition of and. So let's talk about Stride, Stretch, and Strike. These are just different series of preferreds. They have different strike prices. A preferred, I need to make a video about these. But anyway, let's just talk about the metrics tonight. Risk-adjusted reward. Well, risk-adjusted reward wise, all three of them are doing better than anything else here based on Bitcoin. All three of them are. Now, I don't know it's really an apples to apples comparison because these are preferred stocks based on Bitcoin, but whatever. We always look at these on Bitcoin night. So, I mean, Stride NAV went from 78 to 76. That's no big deal. Now, granted, though, it only paid an 11% yield, but I mean, NAV is pretty dang steady, down 2%. So then we have Stretch. This one's NAV has gone from 98 to 99 this quarter, paying about a 10.5% yield. And then we have Strike, STRK. Now, this one's NAV is down a little bit this quarter, and it pays an 8% yield. All right, so those are our contestants. Those are the contestants on The Price is Right. Okay, so now let's talk about some other stuff here. Let's see who else here. We got, okay. We just still have the three of you guys in the comments, which is fine. Thank you guys for being here. All right, let's just look at the quarterly NAV return. That's really all that matters anyway. I mean, it's not all that matters, but the NAV returns the most is one big piece of the puzzle. STRC, the preferred one, is the only one here that can put together a positive.
I didn't get that. Could you try again?
A positive NAV return. But in any event, NAV went from 98.60 90 days ago to $99, and none of the other ones of these could manage any positive amount of NAV at all. The closest one that was actually not a preferred, that's actually like an ETF, a covered call strategy, would be BCCC. That's a covered call strategy, and it's doing the best or maybe the least poorly is one way you can look at it, because it's only down 22% and it's paying about a 50% yield. So that one, BCCC had a good quarter compared to some of these other ones. So did Biddy, BTCI, Baggy, and Blocks, and everything else was down more than 30%. And then we had Maxi, MS2, MSTY down more than 40%. Then we had IMST, MSTW. It's just ugly. It's ugly. Mondays are ugly. All right, so let's look at the Max's Moxie ranking. Strike is number one on Max's Moxie ranking. Let's look at it this way. All right. Let's look at the stable decks. The most stable of all these funds is Stretch, and Stretch is the only one that's positive on NAV. I'm going to go ahead right now and declare Stretch the winner, but let's just sort it by sustainability, which is the max factor. Yeah, Stretch is the winner. So let's look at Stretch. So I was looking at this tonight. So this is preferred stock based on strategy. Pull it up and let's just look at Stretch compared to IBIT. And we're just comparing because MicroStrategies has done poorly, but this isn't really MicroStrategy. It's preferred stock based on MicroStrategy. And then we're comparing against IBIT, which of course is Bitcoin. So of course IBIT's just got hit pretty bad. I mean, IBIT's down a quarter and a quarter. It's down 25% in this last quarter. I mean, and that's just the whole Bitcoin business. It bounced a little bit, but it's ugly. Now look at Stretch, preserving capital and paying a yield. IBIT's a growth stock. It hasn't been growing much, but I mean, it's a growth stock. It doesn't pay a yield. It's, Stretch is not a growth stock, but at least it does pay a yield. Now, it's not like Stretch is without risk. It looks like Stretch was down about 5%, but that was at a time when IBIT was down 30%. So, I mean, that's pretty dang good. So Stretch is definitely the editor's choice. I'm gonna, even if Stretch wouldn't have won, I was gonna overrule it. All right, what else you guys want to talk about? Yeah, Bond's saying Bitcoin has been one step forward and two kicks in the growing. Yeah, two kicks in the butt backwards. It has been ugly. It has been ugly. Why couldn't we just taken 100 back and stayed there? We just had to get right up under 100 and fell. Come on, take that big round number back. Anyway, and then when we fell, then now we've dropped 20% because well, I don't know, 20%, but what did we hit this weekend? BTC 86. I mean, so it dropped. It dropped from, I can't believe that rally. Golly. Anyway, we dropped from 98 to 86. It's 12,000 on 98. What was that? 1/7, 1/8, something like that. 12%, something like that. Not pretty. Yeah, a 12% drop. That's not the overall. I was thinking 12%. That's no big deal. Well, no. Well, that's not the start of it. Let's go back here. It's 12% is from here to here. We've actually dropped, from here. Well, I mean, we dropped from a high of here, but forget about the high. We were in a nice balance at 110, 112 for a while. Basically, we fell out of that. I mean, it's not great. Not great. I hate to see it. ST, okay, yes. So some of them, Stride, maybe Stride was not in the, let's go look. Let's go look at the max factor. Where are you, Stride? Maybe Stride didn't make the trip. Maybe Stride didn't make the travel squad and didn't make it into the max factor, did I? That happens sometimes. Oh, there it is. Yeah, Stride missed the bus. Sorry, Stride will be there next week. Let's just look at Stride though. I guess we should compare Stride to Stretch, since Stretch was our winner. So here I'm going to highlight both of them and make it easier for you guys. Make it easier for you guys to see. Okay, so Stretch pays about 10.5%. Stride only pays 6.3. Oh, wait. Stretch. Gosh darn it. Sorry, I got the wrong one here. Stretch and all right. They both pay about the same, 10.5 to 11.5 in that area. Stride pays around 11.5. Stretch pays 10.5. Now, Stride's NAV has gone from 78 to 76. So their NAV was actually down 2%. It's paying 11% yields and not a huge deal. About twice as volatile as the overall market. And right there, we can see that in the stable dex because it's only a 45. So it's 45% as stable as the whole market. The thing is, Stretch is a lot more stable. Stretch has market stability. Just on a statistical basis, and Stretch was up on NAV where Stride was down in the past 90 days. So Stretch is definitely still the winner. But yeah, sorry, Stride missed the bus somehow. I'm sorry, Stride didn't get on the bus. Thanks for bringing that up, though. I appreciate it. Yeah, Max Gang is here. Absolutely. Wonder when the Neos boosted. So yeah, me too. Me too. I know. I'd love to have the fund managers from Neos on. I'm trying to have a different fund manager on every week or almost every week. We had one last week. I have Tuttle this week. I'm lining up somebody for next week. It's not the guys from Neos. I'm trying to. But yeah, we're going to try to be more consistent about the fund manager interviews. There's so many of these guys nowadays, and they're releasing funds all the time. If I wanted to, I could have a manager on every week. So, I don't know if I'll stick to that. I really don't enjoy the manager talks as much as you. I enjoy when I get an option bro on here, like Jay or Tuttle, and I'm talking risk reversals and stuff like that. But when I get somebody on here that's I mean, all of these guys are option bros. I mean, I get that, but I like when I can get somebody to actually talk more about options and less about the other stuff. But whatever. So, but I think that we could easily go for at least two manager interviews a month. So anyway, but I need to get the Neos guys on the list. Absolutely, I have people on the list I haven't interviewed yet. And then we have people that we talked to before that haven't been around in a while. Like I'd love to get Psychotar back on the show. And lots of people. And I like having regular people on the show. That's what I'm trying to get established with Tuttle. This will be his second time on. I've already had Howard Chan on 3 times before. I'm going to try to have him on here maybe next month. I want to have on regular people. I'll also going to ask Mike Coe to come back on soon. So anyway, we'll do better in the manager interview department. But yeah, I'll take requests for you guys. If you guys know a manager, I've had people, you can say, hey, you need to, whatever. I'll talk to whoever you want me to. Marcus is in the house. Yes, you want to hear more about Mago. I do too, and I've already got a question for him, and I've put it in the comments. And I'm going to ask him, why the hell did he make Mago like that? I don't like Mago. Mago sucks. Oh, what the heck is he thinking? What the heck? Mago's a fully capped upside fund. Why didn't he do it like his other funds? Why didn't he do it with lightning spreads? He could have just done a lightning spread Mag 7. He's recreated. He's made a ULTY situation or whatever. That's nothing wrong with that. But I'm saying he's made a fund that will do pretty well in the bull market and terribly in a bear market. But instead of well in each, or well, you know what I'm saying. I just prefer the uncapped upside. I don't know why on Mago. I get that the will strategy is popular and people like the will. I don't like it because I don't get it. I think he could do so much better using the Mag 7, but just do the same thing he's doing on Meme Y. Have you guys seen this fund? This fund's a beast. Look at this thing that he's doing here. See, let me show you guys something. 1, 2, 3, 4. See these things that I'm highlighting right here? He has all right, down here at the bottom. These go out till April. He bought a 240 option. He sold a 240 option in Coinbase. He bought a call, sold a put. So he's long Coinbase. Okay? Long Coinbase between now and April 26. Doesn't have to worry about time decay because the call and put, the time decay offset each other because he bought one, sold the other. It's just stock for all intents and purposes. So, but he has a 4-leg option positions on all of these, and with the other 2 legs, he puts on every week a position where he sells an out of the money put below the market, like he sold at 227 this week. And then he buys for protection something even a little bit lower than that. He bought at 215, whatever. But the difference in these 2 options right here, at the time that this was printed, it was $1.30. It's worth, the spread's worth about $130. But he'll sell that spread and make $130 as long as the stock doesn't, as long as Coinbase doesn't crash. But the beauty of it is, if Coinbase goes way up, he still makes 130%. But since it's not a covered call, he doesn't have capped upside. So these are lightning spreads. You can do them with 4 legs. You can do them with 3 legs. You can do them with stock plus 2 legs, which is actually the way that the guys over at X Funds are doing it. Old on Nicholas, he uses stock and then he sells a put under the market and then buys a put even further underneath that, right? That's his strategy. Full upside plus a little, plus the sold put spread, can provide a little extra income. So it's a great plan. I don't know why in the heck Matthew didn't just do Mago with this. Use this same strategy on Mago. You'd have or on the Mag 7, you'd have a fund that it would do terrible if the market crashed. I mean, it's going to be long the Mag 7, but I'm saying it's going to be long the Mag 7 and it's going to pay a 30% yield. So if the market does well or something like that, if the market does well, it should be like free money. It should, because you'll get a lot of the upside that the Mag 7 gets, but it'd be like YMAG. YMAG's one of the best funds out there. No one gives it credit because everyone hates Yield Max. But YMAG's a really good fund, in my opinion. Now the Mag 7, they've it's kind of had a rough time, lately. YMAG's gone in the past third of a year from 1575 to call it almost 16 to 14. So dropped about $2. Now Maggie, which a lot of you guys like, and and Maggie's a good one, but it's dropped $4 or $5 on that too. They have similar metrics, but I think YMAG's good, but it obviously is not in the right environment though. So let's look at YMAG. Let's look at this. In the right environment, if you put an uncapped upside, on because YMAG and Maggie are doing these returns. Well, I don't know what Maggie's deal is. But YMAG is doing this with capped upside, and they're still able to, to have really good return. Let's look at them over the past year. Let's do this. Let's do it like this. Oh yeah, well these have only been around since I think Maggie came out on April 23rd. Man, what a good time to put a fund out. Maggie has been a great fund. It came out, it looks like the starting price was $52. It's kind of weird the starting price is $52.55 because usually they open around 50. But well, in any event. All right, I'm into uncapped upside. But yeah, we'll talk. We'll talk about. I'm sure he has a reason, and I'm just kind of joking too. There's lots of reasons. Just like anything, there's half the time you'd rather have capped upside when the market's going down. You don't know in advance. So it's not like there's just one wrong answer, one right answer. But the fact that the market generally trends up, I generally like to try to keep my upside open. But yeah, but it's a lot more complicated than that, right? Yeah, I was hoping that Neos the boost would launch this month, and we need something to compete with TDAC and T-Spy out there killing it. Hey, if you guys have any TDAC or T-Spy questions, Matthew Tuttle's the sub-advisor on those funds too. So I don't know that he's, but he can probably answer some basic questions about those funds or something. He also works with Rex on those T-Rex funds. There's something called I think they're levered. I don't think they're income. He's a sub-advisor on that too. So the guy's a wealth of knowledge. He's going to be on the show Friday, and I'm really looking forward to it. All right. What else you guys want to talk about? You guys want me to look at anything for you guys or anything like that? Well, okay. That's a great question, DJ. Just because of fund, the strategy, when I say a strategy has capped upside, that means, okay, you sell a call or you're capping, you guys get the math of it. You're capping your upside between a certain point. Doesn't mean that the fund can't make money. All right. It doesn't mean that the fund can't make a profit because they're getting money in return for capping the upside. So it doesn't have anything to do with whether they make money or not. I just prefer the funds that don't cap the upside. But all it does is it changes how the fund behaves. When you have a fund that doesn't cap the upside, it behaves less like an income fund and more like a growth fund. The stock price does. So it doesn't have as, but those, you have funds out there, SPY, Triple QI have fully capped upside. They make plenty of, lots of funds have fully capped upside where they do covered calls and don't do call spreads or whatever, but they do out of the money and they manage them and they roll and stuff and they make plenty of money. So it's not like it's not like a fund can't make money if a strategy has capped upside, but the amount of money they make isn't as correlated to the market going up. I like when the market goes up and it makes your strategies do well also. I like that. I'm always looking for the tailwind of the market. That's my idea, but that's not the only way to do it. You just bought TSYX. Congratulations. But the other thing is, DJ, and it does, okay, how does it grow? So these funds can grow if they cap upside. I'm trying to think of a good example. XTT, fully capped upside. It's from Round Hill. Okay. WDT from Defiance, fully capped upside. Okay, Round Hill and Defiance. So they grew. They grew. One made 11%, one made 12% in the past year. So they're both fully capped on the upside. It's not that they can't grow. It's just that I would rather if they were uncapped. The other thing is that in any covered call fund, the covered call itself is a cap. but it's how it's executed. It's how far out do you put the covered call. It's when do you decide to adjust the position. And so there's so many more details to that. But other things being equal, I think the best strategies are the ones that sell put spreads. So the stock's free to go up as far as it wants. But I would be wrong if the market turns around and in a bear market, I would rather have regular covered calls. But since I'm a perma bull and I'm assuming in a bullish market, I like the uncapped. That's just me. No right or wrong answer. Like I say, some there's people that made millions on covered calls and doing fine. There's nothing wrong with covered calls. It's a strategy. Nothing wrong with it. Waiting to see what new funds do before you get any more. I hear you on that. I hear you on that. GDXW, please and thank you. Recently actually outperformed its underlying. And yes, okay. That's a great question. I love these types of questions. GDXW probably did outperform its underlying because it has leverage. GDXW has 20% leverage. And in fact, any fund that ends in a W, or not any fund that ends in a W, but the Round Hill income funds, they have a whole series, and those funds all end in a W. There's like 15 or 20 of them. I mean, TSLW, GDXW, MSTW, whatever. Those all have a little bit of leverage on them. So all of those ought to outperform their underlying in a bull market, but yeah, so I do think that's true that one did outperform. So let's just look. But it'll work both ways. If the market goes down, it'll outperform on the way down too, because it's levered. It doesn't have protected downside. Do a little bit worse on the way down, a little bit better on the way up. But yeah, GDXW is a monster. Or it's not really GDXW. GDX is the monster. GDXW is doing a good job. GDXW is like a cowboy and GDX is the bull. The cowboy, he's hanging on, but I'm just saying that the bull's taking this cowboy, the bull's the reason for the high score. The cowboy's just hanging on, getting those style points. What is the highest yield without an upside cap? Good question. I don't know. So, like I say, the upside cap isn't the be all and end all. So there's lots of, I consider SPY I fully capped. And it's one of the better funds out there. So, it's not the be all and end all, but the ones that are uncapped that I'm particularly interested in are the lightning spread funds. And that would be blocks. That would be GX. That would be QLDY. And that would also be MEMY, which I showed you. We looked at MEMY. Remember these 4-leg option positions? Those are the uncapped upside ones. I think all of those pay around 30%. The thing is, the uncapped upside funds, because their upside's uncapped, they pay a little bit less just because of math. You can get a little bit more on it when you do a fully capped covered call, at the money covered call. That's the best way if you want a lot of yield, but it also caps you the hardest. So it's the most effective at capping you. So there's all types of variations in between. But the ones I'm particularly interested in pay around 30%, and their names are blocks and QLDY, basically. And FIAC. So, whatever's doing that strategy. All right. So, Eric, yeah. Oh, yeah. Of course, GDXW is doing better than GDXY. It ought to. GDXY doesn't use leverage. GDXY will do better than GDXW on the way down, but not on the way up. GLDW is an old nag. Yeah, I hear you on that one. I'm sorry about that. GLDW is a nag. LDW. So's GLDY. You want to talk about a nag? I don't look too naggy there, though. Let's compare. Well, but it's based on goals. So let's compare GLDW to GLD. GLDW is beating GLD. Once again, like I say, anything with the W has leverage. So GDXY is beating GDX, or GDXW's beating GDX by 20%. GLDW is beating GLD by 20%. Now let's see. Now you were saying GLDW is a nag. You mean compared to GDXY or GDXW? Maybe is what you meant. XW. Yes, and it is a nag, but I mean it's hard to argue with 26% and a quarter. But yeah, I got you on that. We're getting spoiled on that. Heck yeah, blocks, QLDY. Yeah, Marcus, did you have anything to add to what I say? I mean, those are the main ones in the uncapped upside space right now. Or FIAX. Does GX do it yet? I don't know if GX does it, but or no, GX does it, but does FIAX do it yet? I get FIAX and GX, but whatever. It's GX, it's blocks, it's QLDY, and it's MEMY. And there's other ones too that use a different mechanism for not being capped, and they use total return swaps. I'm more interested in the lightning spread version of uncapped, but when we're talking total return swaps, well, we have one right here, GDXW. They use total return swaps plus a little bit of leveraged, or maybe a leveraged swap. I don't know how they do it, but anyway, so the W series funds also have uncapped upside. They just do it in a different mechanism. But I just prefer the lightning spread way to do it. Yeah, it's doing good, just a little more stable. Okay, I got you. Yeah. You know, it is doing well. You're just joking, but yeah. K yield. Oh yeah, K yields. Well, no, K yield has a bunch of precious metals in it. I mean, it's the thing about the divas, and that's the reason I call them the divas. These guys are like managing hedge funds. Howard can buy anything he wants in here. He can do anything he wants, and so can Jay and Scott and Alti, and so can the guys at Rex and Alti, and so can David over at Blocks. They're the shot callers on these funds. And Howard over here at K Yield probably has some gold and silver in here. Now look at this: 8% of the fund is gold miners, GDX. And then he has 8.8% of the fund is silver miners. And then he has, I guess that's in the top 10, that's all based on gold and silver. I wouldn't be surprised that there's maybe more there, but yeah. So, I mean, yeah, K Yield's doing really well. I love me some K Yield. And that's why we look at it every day on this spreadsheet right here. The diversified divas, but we look at it every day here, the rolling total return, and you look here on this whole thing, K Yield is fifth. It's behind the two benchmarks, SPY and the Qs, and I'd expect it to be behind the benchmarks. I mean, it's not a growth fund, it's an income fund. It ought to be behind the benchmarks. That's fine. It's behind Chippy. Okay, well, yeah, Chippy's based on microchips. Microchips have been doing well. That's good for Chippy. It's behind Chippy, the SPY, and the Qs, and it's behind one other fund. And guess what the other fund does? The other fund's an uncapped upside lightning spread fund. QLDY is also ahead of K Yield since inception, since K Yield was incepted. But when K Yield's down 5, the QLDY, the lightning spread, is only down 2.5. To be fair, K Yield will probably do better in a runaway bull market. I'm not saying that the QLDY is necessarily better than K Yield. It just happens to be ahead of it right now. I think in an extended bear market, I would think Howard would figure out a way to outperform QLDY. QLDY is based on the whole Qs index. K Yield, he picks and chooses whatever stocks he wants to out of the SPY and the Qs or whatever. But anyway, K Yield is doing a lot better than all these other dogs that I follow and own, like WPay. I sold WPay the other day. I sold all the WPay and a third of my Alti. But in any event, WPay is down 13% at the same time period. K Yield's down 5. In the same period, QLDY, which I also have, is only down 2.5. Yeah. Anyway, but then we have LFGY down 16. Then we have Alti down 16 and a half. And then we have blocks down 19.15. Gosh darn it, blocks. And then we have ULTI. The only reason I'm not that mad at blocks is because it's based on Bitcoin, and Bitcoin's down so much. But I'm still disappointed in it. I'm not thrilled with the way it's reacting. You're beginning to like K yield more and more. Yeah, me too. It's looking. I mean, they say numbers don't lie, but numbers do lie all the time, actually. Anyway, but heck yeah, I mean, me too. K yield is now my biggest position in my real money in my family's portfolio that I'm managing. It's actually up 5% year to date and killing it this year. I have K gold, I have K sil, I have me some. I have K yield. I had W pay, but I got rid of all of that. But anyway, I have some good ones. I have some QLDY. I still have some ULTY left, just not as much as I once had. At one point, ULTY was like 25% of my account, and it's down to about 9% now. So it's as better ones are coming out, I'm selling it and putting them in the strategies that are less capped on the upside. But yeah, I like K yield a lot. Thing is, you don't have to have just one of these. So I'm trying to have a handful of them, and my handful are K yield, QLDY, ULTY. I mean, it's only 9%, but still, I'm holding on to blocks and but then I bought the income stack product the other day, and then I also bought some meme Y the other day. So anyway, we'll see how it goes, right? We'll see how it goes. All right, guys. Well, that's about all I have for you tonight. Unless there's anything else that you guys have for me, be sure to put in the comments. I'd be happy to talk about it, answer it, whatever. Don't forget, if you'd like to support the channel, you can go to paypal.me/Max Convexity. I'd appreciate that. And remember, this is not financial advice. Please consult a professional advisor. Go watch my video if you haven't already. I did a video on the MLP funds. Anyway, go check it out. It's out there right now. Outside of that, like I say, talk to a planner. For sure, talk to a planner. I'll be back in the morning. Hit that like and subscribe. And I will talk to you later.